The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. If you have a phone, make the call, 800-306-1990. 800-306-1990. Every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates. They don't tell us points paid, points received, or APR. They tell us the actual locked rates with consumers across 42% of all mortgage transactions nationwide. 30-year conforming loan, 6.656. That's where they locked at yesterday. Down a little bit. 30-year jumbo loans, 6.977. Down quite a bit yesterday. 30-year FHA loans, those were up yesterday just a touch. 6.503 USDA loans. That's the rural areas, generally no down payment. 6.472, down a bit. And the best loan on the market, that's our 30-year VA loan, 6.207. If you want our commentary on what's happening in the mortgage market and the mortgage world, as early as the data provides every morning, every business morning, rsrmarketminute.com, rsrmarketminute.com. We send that out again as early as the data allows. We put it out first by email to our subscribers, which you can be one for free. And then we try and get it onto the socials if I have time before the radio broadcast. What's going on today? Let's look at that now and see. Hopefully the charts have updated themselves this morning. The S&P 500 is down 32 points. I don't watch this one very often, but Bitcoin is up just a little bit today because they've decided that you can do it in an ETF now. That's the reason why that one is going and moving the way it is. The 10-year Treasury is flat, 4.03. We talked about that. Mortgage-backed securities are up 17 basis points. We've talked about that. Bond up 17 basis points means yield or the interest rate is down. It's not down in a percentage, is not equal to 1-to-1. So it's a factor in there. So it's down just a little bit. What's driving it? Because all that information, if you wanted to, which we appreciate and never take for granted the fact that you're listening to us on Ron Siegel Radio, you can get that information on the super secret website, google.com. But here's what's driving this. Consumer Price Index, December's report, showed that overall inflation rose 0.3% for the month, which was 1/10 higher than estimates. Year-over-year inflation increased from 3.1 to 3.4%. Big part of the increase was a very low comparison last year. Hopefully, it's going to improve at some point. Core rate, that strips out food and energy. I'm sure there's somebody that doesn't need food and energy, but the core rate takes that out. Legitimately, that's because the Federal Reserve says they can't control that. Increased by 0.3%, in line with estimates year over year. Core CPI declined from 4% to 3.9%. 1/10 hotter than estimates, but significant that it is in the threes now. It's called a 3 handle. And that's a big issue because the Federal Reserve wants that to be 2.0. So they claim they're not going to be They're going to keep the monetary or the fiscal policy tighter, monetary policy tighter. Fiscal is the federal government. Can't get them to tighten up their belt on anything. Energy prices rose 0.4% with gasoline up 0.2%. This one is another one that has those of us who follow these numbers have no life scratching our heads. Used car prices were higher and rose by 0.5%. Even though during the measured period, they were lower in the Manheim and the Car Guru Used Car Index. Manheim is the largest seller of used cars in America. Unbelievable. I mean, they have a facility right around the corner from where we broadcast. They move 2,400 cars a week through that facility. They know what's going on with used cars. They say the prices are dropping. In this report, they're increasing. Eventually, that's going to catch up. Shelter costs make up 44% of the core index. Those rose 0.5%. Those have been cooling off too. Shelter is now up 6.2% year over year, down from 6.5%. Rents rose 0.4% last month and are up 6.5% year over year, down from 6.9 in the previous report. Owner's equivalent rent, that's kind of a fake number because most owners are not in real estate. So they get owner's equivalent rent by calling up the homeowner and saying, what could you rent your house for? I talk to people all the time, and I've never heard people that really have a good idea, a good handle on what they could rent their house for. But they use it in the report anyway. So that one rose 0.5%, up 6.3% year over year, down from 6.7. Lodging away from home, hotels, Airbnb, Vrbo, rose 0.4%. Thankfully, that's a small portion of that index because it's very, very volatile. Rent should be coming in lower than the 0.4% as we've been seeing real-time figures cool significantly, but we may have to wait a few more months based on when the BLS pulls their rental data. March, April, I've been telling you, interest rates are going to really start coming down probably second quarter of this year. Unfortunately, I believe that'll coincide with our recession and 5.5% unemployment rates. Throw that out there. Motor vehicle insurance makes up 3.6% of core reading, rose 1.5%, continues to work against us. Again, this has been impacted by natural disasters, flooding, car theft, which is at a 15-year high. Fed can't control those things. Health insurance rose 1.1%. That's all because of new ways they're calculating. A lot of stuff in the report. New York Fed president. He's an important guy, John Williams. So he's hedging his bet. He made some comments yesterday that were not too bond-friendly, saying that to ensure a smooth transition, Fed never does a smooth transition. The Fed intends to slow and then stop the decline in the size of the balance sheet when reserve balances are somewhat above the level it judges to be consistent with ample reserves. Kamala Harris wrote that for him. I have no clue what the heck he's talking about. And I study this stuff. That's the Mortgage Minute brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call. 800-306-1990, 800-306-1990.